Hey, this is David McCree, CPA, the nonprofit tax guy. Today's video is about when a new nonprofit's first federal tax return is due. So this video is for nonprofit organizations that are trying to figure out what Form 990 return they need to file and when it is due. The rule is that the first return is due 4 months and 15 days after the end of the organization's tax year. So if the organization's first tax year ended on December 31st, then the first return is going to be due on May 15th of the following year. Some organizations are not sure how to determine what month and day represents the end of their tax year. So one way is that when you were communicating with the IRS during the setup of your organization, there were generally two places where the IRS asked you what month you've chosen for your organization's tax year end. So Form SS4, which is what you use to apply for a tax ID number. It's also known as the employer ID number. This form asks that you indicate the month your board has chosen for an accounting or tax year end. Also, when you file Form 1023 or 1023EZ or Form 1024 or Form 1024A, there's a place on the form to indicate the accounting year that you've chosen. Now, if you're not sure which month your organization's board has chosen for a year end, that's one place to start checking those documents. Usually an organization is going to use the calendar year as its accounting year. That means December 31st marks the end of the accounting year, also called the tax year end or the fiscal year end. Right? Usually the word fiscal year end is used if your accounting year ends on a month other than December 31st. Right? But December 31st is still a fiscal year, and it is the most common. So your organization might have chosen another month on which to end its accounting year, perhaps to more closely align with its activities. Like a high school football booster club might choose June 30th as the end of its accounting year to coincide with the school year. A return for an organization with a June 30th accounting year end would be due 4.5 months after June 30th. That means November 15th. For purposes of this video, I'm just going to assume that every example that I give has a December 31st year end and a May 15th due date, unless I say otherwise. So one of the things that I want to bring out is that it's important to know that even though your organization might have indicated on Form SS4 or on its application for tax-exempt status that it had a certain accounting year end, those documents do not absolutely determine the tax year end. The filing of your first return actually establishes your accounting year end. So the tax year that you use for filing your return should always match the accounting year that's used by your accounting system. A tax year can never be more than 12 months, but it can be fewer than 12 months. If your organization applied for its tax-exempt status and it received a determination letter from the IRS, there's a couple of important dates in the heading of that letter. The first is the date, or sometimes in some of the older determination letters they called it the ruling year. It just tells the IRS and the public, whoever's looking at this document, which year or on what date the IRS determined that the organization is exempt from federal income tax. It's usually an ink stamp date. In this example, it's in the upper left corner there where the green arrow is. The next date that's important is the effective date of exemption. Now that's the blue arrow in this example, and this is a very important date. Starting on this date, your organization became officially tax exempt. In most cases, this is going to correspond to the organization's date of incorporation. If so, then this date is the first day of your first accounting year. In this example, it says October 27, 2010. Okay, so that's the first day of their first accounting year, and then the red arrow indicates that the accounting period ends on December 31st. Okay, so this date tells you that the IRS has in its records that the organization's accounting year end is December 31st. So it's going to be expecting a return to be filed based on a December 31st year end. So in this case, the first accounting year for this organization is going to be starting October 27, 2010 and ending December 31st, 2010. So their first filing will be due May 15th, 2011, and it will cover that short period. Okay, but then the next year after that will start January 1st, 2011, and go through from January 1st, 2011 to December 31st, 2011. Okay, so it's important to understand that even if your first year was only a couple months or a couple weeks or even a couple of days, you still have a filing requirement. So let's look at an example. Assume that an organization was incorporated on November 10th, 2019, and it uses the calendar year as its accounting year. Assume the organization didn't receive any contributions, no other revenue in 2019, and it had no expenses. It didn't get any revenue until 2020. And this is very common. You know, your first year is just a couple months. You don't really get ramped up in your fundraising. The next year is when you get started on your fundraising in many cases. However, in this case, in a case like this, a Form 990N electronic postcard is going to be due by May 15, 2020 to cover the short 2019 first year, unless the organization is, for some other reason, not eligible to file a 990N, which we'll talk about that later. Right? So the important thing is, just even though you didn't have any income, you didn't have any expenses in that first year, you still are going to have some type of a filing requirement. And it's going to be a 990N in most cases. Now, if the IRS records show that the organization has a June 30th fiscal year end, for instance, but the organization files a return based on a December 31st year end, it's going to create confusion, and that's going to have to be explained to the IRS, and the IRS is going to have to correct its records. That's if you file a paper return. Now, if you file an electronic return, you're probably not going to be able to file it. The IRS is going to reject the filing, and it's going to give you an error message that says the fiscal year on the return does not match the IRS records. If an organization with a determination letter is filing a Form 990N on the IRS website, it's only going to be able to file a return for the fiscal year that's shown in the IRS records. So if the IRS records are not correct, you're going to have to call the IRS to straighten it out before filing your Form 990N. So, you know, for instance, here's what's going to happen. You know, you log into the IRS, your IRS account to file, and one of the first things it asks you is which year are you filing for? And if you're trying to file for a June 30th year end, well, they've got a little drop-down box, and you choose which year you're filing for. For the most part, you're just going to get one choice, and if the IRS thinks December 31st is your fiscal year end, then that's the only choice it's going to give you. And in that case, you know, you're not going to be able to file what you want, so you're going to have to call the IRS, and you may end up having to write a letter to them to explain. Which return should the organization file? Okay, now this goes for this video is directed at new organizations or organizations that may be a year or two old, and they still haven't gotten around to filing anything because they don't know what to do. They're trying to figure it out. But a lot of what I'm talking about is going to apply to organizations that have been in business for a longer period of time as well. So good information here. The first consideration is whether the organization is a private foundation or whether it's a public charity. A private tax-exempt foundation must file Form 990-PF. Okay, PF meaning private foundation. It's a completely different return than the regular Form 990. It has to file the Form 990-PF even if it had no income or no expenses. All right. A tax-exempt organization that's other than a private foundation, which may mean it's a public charity, it may mean it's a social welfare organization, it may mean it's a business league, a social club, okay? Other than a private foundation, has to decide between filing a 990N, which is the electronic postcard, a 990EZ, or the full long form 990. So the 990N is the electronic postcard. It's very simple. and it doesn't ask for any financial information. It just asks you to check a box that to swear that your gross receipts are normally $50,000 or less, and we'll talk about that in a little bit. And this is also referred to as an annual notice. Okay. The Form 990EZ is a 4-page core form with a statement of income and expenses and a balance sheet. And there are other schedules that might be required as well, like a Schedule A, a Schedule B, a Schedule D, a Schedule O. Then the Form 990, the full Form 990 is a 12-page core form, which also has additional schedules that may be required. Now, my advice, in general, file the simplest form you're permitted to file by the IRS. Okay, so in other words, submit a 990N rather than filing a 990EZ if you can, or file a 990EZ if possible rather than filing the full Form 990. It's just a matter of the amount of time and effort it's going to take to pull together the information and file the form. Now, I want to say something quickly about extensions of the due date. The due date for the Form 990N, the electronic postcard, cannot be extended. Okay, there's no paper form, there's no extension that can be filed. However, there's no penalty, no monetary penalty for filing it late. So if it's due May 15th and you don't file it till September, no big deal. Okay, don't lose sleep over that. The only penalty would be if you failed to file it for 3 consecutive years, then you would lose your tax-exempt status, right? But just as far as a monetary, and even then, there's no monetary penalty, right? The penalty is you lose your tax-exempt status. Okay. The Form 990EZ, the Form 990, and the Form 990PF can get a 6-month extension of time to file by filing Form 8868. And those forms have significant penalties for late filing. So now what I want to do is take you to the IRS website, and we're going to just get into the nuts and bolts of where and how you determine what an organization's filing requirement is. So we're going to go to irs.gov, and we're going to come over here and click on the Charities and Nonprofits link. And then we're going to come down here to this link, Annual Reporting and Filing. And then we're going to come to Filing Thresholds, which 990 series return to file. Other than as prohibited by the limited exceptions to submitting the Form 990N, an organization that passes a certain gross receipts test may submit the Form 990N instead of filing the Form 990EZ or the full Form 990. Except remember, a private foundation can never file a 990N. Okay, they always file a 990PF. So let's take a minute and just go over which organizations are not eligible to file Form 990N, even if their gross receipts are normally less than or equal to $50,000 annually. So we're going to click on this eligible link here, and it's going to give us a list. Okay, so obviously gross receipts over $50,000 and you can't file the 990N. Private foundations, as we've already discussed, have to file a 990PF. A 509A3 supporting organization is not eligible to file a Form 990N. If you are a supporting organization, you will know that. It will be part of your determination letter. Section 527 political organizations cannot file a 990N, and other organizations that are not eligible are listed here: 501c1, C20, C23, C24, 501d, Section 529, and some trusts. So important to rule those things out. Make sure that you're not disqualified on that basis. If you're not any of those things, then as long as you pass the gross receipts test, then you should be able to file the Form 990N. The gross receipts test, which we're going to talk about here, uses the phrase normally $50,000 or less. Okay, an eligible organization that has gross receipts of normally $50,000 or less may submit the Form 990N electronic postcard to fulfill its filing requirement. Okay. It's really common for organizations with a short initial year, their first year, to qualify to submit the Form 990N electronic postcard, since gross receipts in that short period are often not likely to exceed the 990N eligibility threshold. On this chart here, you can see that if an organization has gross receipts normally $50,000 or less, it can file the Form 990N. If it has gross receipts of less than $200,000 and total assets of less than $500,000, it can file either the Form 990EZ or the Form 990 if it chooses to. Okay, if it has gross receipts greater than or equal to $200,000 or total assets greater than or equal to $500,000, then it's not eligible to file the 990N or the 990EZ. It has to file the full Form 990, that 12-page core form. And again, just as a reminder, private foundation, it doesn't matter what your financial status is, you're going to file the 990PF. Now, let's talk about what it means for gross receipts to be normally $50,000 or less. Okay? This is a 3-year average. Okay, so I've put together a little worksheet here. And so what the 3-year average is you take the year that you're filing for and the previous 2 years, you add those together and divide by 3. So you get an average gross receipts for the 3 years. So in this example, for instance, in the first year there was no income. The second year there was $35,000 in income, which means contributions, program service fees, sales of merchandise, fundraising, interest from the bank. Third year, there was $60,000 in gross receipts. Okay. Now, some people might look at that and say, "Oh, well, look, they had $60,000 in the third year, so that means we can't file the 990N." Not true. Like I said, it's a 3-year average. So if you add the gross receipts for each year, for those first 3 years, or for the current year that you're filing plus the 2 previous years, here we get $95,000. Okay, if we divide that by 3, we get $31,667. So that means that their average gross receipts are normally, according to the IRS, $31,667. That's less than $50,000. So they're eligible, all else being equal, they're eligible to submit the Form 990N. Now, you're probably saying, "Well, David, you're talking about new organizations here for the most part, and we haven't been around for 3 years. How are we going to calculate a 3-year average?" Well, there's a special rule for that, and let's go find it. Okay, so we're going to go to, let's see, we're going to search IRS Form 90EZ instructions. And here we go. There's the instructions. Okay, so these are the instructions to the 990EZ for 2019. And I happen to know that the special rule that we're looking for to calculate the gross receipts is in the appendix. And I believe here it is in Appendix B. Here it is, the $50,000 gross receipts test. To determine whether an organization's gross receipts are normally $50,000 or less, apply the following test. Okay, an organization's gross receipts are considered normally to be $50,000 if the organization is up to a year old and has received or donors have pledged to give $75,000 or less during its first tax year. Okay, so if you're just a year old, right? You've just experienced your first year, and you've received $75,000 or less during that first year, the IRS considers that your annual gross receipts are normally $50,000 or less. Okay. Now it's important to understand here that even if you receive no money, but you have a donor that has told you, has made a legally enforceable pledge to you, saying, I'm going to give you $100,000, and I'll pay it to you after the first of the year. So in other words, you're receiving that money during your second year. In that case, you have to count that pledge. Okay, and for this test, you count not only what you've received, but any pledges that you've received. As long as you received the pledge during the first year. Okay. Now, what if you're more than a year old, but you're not 3 years old yet? Okay. So number two, between 1 and 3 years old, and you've averaged $60,000 or less in gross receipts during each of its first 2 tax years. Okay, so in this case, you would add year 1 and year 2 gross receipts and divide by 2. And if it's $60,000 or less, then you're good to file Form 990N. Okay, the electronic postcard. Now, then number 3, that's the one the example we looked at with the Excel sheet where you average 3 years. Even if you are eligible to file the Form 990N, the electronic postcard, you can choose to go ahead and file the 990EZ or the full Form 990 if you wish. If you do that, you must file a complete return. All the schedules, check all the boxes, answer all the questions, provide all the narrative and all the descriptions, and put in whatever attachments you have to put in. Okay, you can't just put zeros on the 990EZ or the 990N and mail it in. Not going to work. And once you file it and it's incomplete, it's considered as though you have not filed it at all, and you could end up in a penalty situation, even though you could have filed the 990, the N, if you wanted to. So just a couple of things learned from experience. So what happens if your organization has not yet applied for its tax-exempt status with the IRS, or if it has recently applied but has not yet received a response, it hasn't received its determination letter? Well, you're going to use the same rules that we've been talking about to determine which return should be filed. If you determine that you are going to file a 990N, you have to realize, because you've just applied, the IRS doesn't know about you yet. Okay, if it hasn't processed your application, it doesn't know about you, so there's no computer record for you. So you're not going to be able to file the 990N. So what you have to do is you have to call the IRS at 877-829-5500. You're going to have to let them know that you've applied for your tax-exempt status. You haven't gotten your determination letter, but you need to file your first 990N. It's due. Okay? So the IRS what they'll do is they'll set up a computer record for you so that you will be able to file the 990N, the electronic postcard. But it takes, 4 to 6 weeks. The way things are now, maybe it takes longer. But remember, there's no monetary penalty for not filing the 990N exactly by the due date, so don't get excited about that. Now, in the case of a private foundation or Form 990 or Form 990EZ, you're going to have to file a paper return. Okay, because again, the IRS computer doesn't know you exist yet, because it has not yet processed your application. So if you try to file a return electronically, it's just going to say, we don't know who you are, we reject the return. Okay. To file the paper return, what you're going to need to do is on the first page of the EZ or the 990 or the PF, you're going to need to indicate that by checking the box that the application is pending and that's your initial return. It's the first return you file for the organization. And the IRS will understand how to process it. Now, I'm just going to throw this in as a reminder that when you file any type of return, you need to get proof that you filed it and what date it was filed. Okay? I don't care if you're a CPA, if you're an attorney, if you're an enrolled agent, or if you're doing tax returns part-time on the side. Okay, or maybe you're a treasurer of the organization. You need to get proof of filing. Okay, so either use certified mail if you're mailing in a paper return and get a return receipt, or if the return is filed electronically, print your confirmation either from the IRS website. Print the confirmation if it's a 990N, or if you're using tax software, print or somehow save the confirmation that not only that the return was filed and the date it was filed on, but the fact that it was accepted by the IRS, and it will have the submission ID number on it. Okay, I apologize for the length of the video, but I gave you a lot of information there. If you need assistance, feel free to contact me. Come to my website, nonprofittaxguy.com. Click on the contact link here, and you'll find a contact form and my phone number. I normally prefer that you send me a contact form just to kind of give me a heads up, tell me what your issue is, and I like to be able to schedule a phone call rather than just having you call me out of the blue. I'd rather get the form or the email. All right, so good luck. Thanks for listening.